In 2015, we saw 148% growth in the personal loans that Credit Karma helped originate on our platform. If you take a look at the growth in personal loans, that's certainly a byproduct of, one, more lenders in the space, but two, I think it's also a byproduct of the pent-up demand. 5 years ago, there were virtually no personal lenders in the space, or no one that would write to anything less than perfect credit. And I think today you're seeing actually quite a bit of competition in that space. 2008 and 2009 were a seminal year in terms of the number of lenders that went out of business. We think that it was, akin or analogous to a wildfire, right? And after the wildfire, there tend to be some green shoots and new business ideas that pop up, and I think that's what you're seeing. There was certainly a hole in the marketplace, and I think you're seeing a lot of the personal loan players in the fintech space fill that void. When you take a look at the marketplace and the overall growth, certainly there have been a lot of dollars that have been poured into it, but if you take a look at the fundamentals and the rationale as to why this can be a big market, it used to be the operational efficiency of personal loans was actually quite high, so a lot of these had brick and mortar type of stores. They didn't have necessarily big data to underwrite and evaluate new credit models, and this is the new model in this space with the idea that you can be a great personal loan lender without a lot of the traditional overhead that you saw in the space, and I think that's why there's a mass investment in the space. When you take a look at the global markets, I think there's certainly a little bit of caution and concern in terms of China, in terms of the energy markets. Even in the course of the last 90 days, I think there is a little bit of a pullback both in the public market side of the world, but that certainly has ramifications in the private market side. From a consumer perspective, consumers shouldn't be worried about the lender on our platform in the sense that once the dollars are funded, they should feel pretty good that they have the utility and it's in their bank account. I think sort of the more worrisome side is maybe for the lenders who are on those particular platforms and what the ultimate trade-offs are going to be. Now, I think from that perspective, normally things don't decelerate extremely quickly. I think there tends to be, a slow slope or some progression of defaults. So I think the more well-established players, the players that are more well-capitalized, they'll have a better sense of the best underwriting out there, and I think they'll be the players that have a little bit of a leg up, particularly on the new companies that are moving into the marketplace.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Cramer's Mad Money, and all the latest from CNBC.